2019 forecast, these product categories. I'll tell you what I said last year going into 2018 and kind of how I did there. In the office and industrial market going into 2018, I knew it'd be a big construction year. We're going to continue to get strong absorption. I thought the Research Triangle Park vacancy was going to rise. Industrial remains the market leader. Industrial is the market leader. Correct on bigger construction year with 3.1 million square feet. A lot of absorption, 7.1 million square feet. But I missed on that Research Triangle Park market. Vacancy actually dropped a little bit there because we had 550,000 square feet of positive absorption. So as we move into 2019, it's going to be another strong construction year. We're just not going to see what we saw in 2018. We've had record low vacancy in an industrial market. I don't know if we can sustain that. Believe it'll rise by the end of the year. The office market stays healthy. 5 office submarkets will remain in that 10% vacancy, under the 10% vacancy range, in the single digits. And I mentioned earlier, downtown Raleigh had 3% vacancy. I think it's going to stay there. We don't have a whole lot of new construction, and downtown Raleigh is very active. How about in the retail markets? I said for 2018, slowing construction, negative absorption in several markets, and minimal leasing overall. I mean, I was right on here. 441,000 square feet was built last year. 200,000 square feet less than what was completed in 2017. 3 submarkets had negative absorption, and only 173,000 square feet of positive absorption overall. Now for 2019, expect another big construction year. Again, as Joaquin mentioned, over 1 million square feet underway. Now, I didn't stay in a Holiday Inn Express last night, but I can tell you that absorption, you're going to get some absorption pressure, and you need to expect vacancy in this market to rise again. These big box retailers are continuing to fight to stay relevant. Expect more closure announcements as well. We go into the multifamily and the apartment market. I said for 2018, vacancy was going to go up, deliveries dropped, but continued good absorption. We're right on here. Vacancy did go up, although just a bit. Deliveries dropped for the first time in 5 years, but we continue to see good absorption in the apartment market. 2019, I don't see any signs that absorption is going to decline. Again, there will be fewer proposed apartment units, but will deliver the same amount because they're already under construction. Rental rates are going to remain strong. I don't think that you could expect a whole lot of increase. And there's no shortage of capital. Banks are still lending on this product category. And vacancy remains stable in the apartment market in 2019 at 6%. The single-family homes market. I said in 2018, another 10% increase in sales. Inventory shortages, especially in Wake County. Kind of close here. We had an increase in sales, but it just didn't hit 10%. We did see some inventory shortages, but as I mentioned again, it's important to note that overall inventory goes up for the first time in 8 years. Headed into 2019 in the single-family sales and development, similar sales volume, minimal movement in overall inventory. For the first time in several years, we'll see a drop in building permits. And despite a 6% increase in sales this past year, I don't think that we're going to make that in 2019, although there will be a minimal increase. Our investor outlook for land. Our land specialist, Tim Brent, is going to tell you all about it.
The investor outlook for land remains strong throughout 2018. Our growing population continues to be the driving factor especially for single-family and multifamily land. We've also seen more developers and builders enter the market. Pricing has leveled off in some areas due to rising construction costs, but the central business districts continue to hit record highs with land prices well over $100 per square foot. I'm standing near the corner of Trinity and Corporate Center Drive in Raleigh, and this will be the home of the new Drive Shack entertainment venue, which was a land transaction recently handled by NAI Carolantic. Though it could be considered a retail development, we've seen overall retail land sales slow as retailers consider their footprint and reanalyze their geographic locations. We are, however, seeing some neighborhood retail growth as more municipalities are wanting to see a mix of uses, especially in multifamily developments. With our current low office vacancy, we are seeing good activity for well-located office sites, and the same goes for hotel sites as developers continue to have an appetite for the Triangle region. Demand for well-located industrial land is also strong, but pricing for ground zero sites is rising due to limited supply. There does become a point, however, where developers cannot make numbers work, so industrial sites in outlying areas of our region are seeing more and more activity. Zoned and entitled land will be most attractive to buyers, as the rezoning and entitlement process can be long, affecting build cycles for both builders and developers. There continues to be some great opportunities in surrounding counties, and overall, we expect 2019 to be another great year for the land market. Please let us know if we can be of help.
Nicely done. Our investor outlook for income property, a veteran professional, Hunt Weiss, is going to tell you about this market.
For the first time in many years, real estate investors could face some challenges in 2019. Rising interest rates, higher construction costs, retailers downsizing, and office co-working trends create much of the concern. The industrial market continues to be the most attractive segment, with rising rental rates, attractive lease terms, and low cap rates. As expected, regional retail malls and power centers are the least popular product type. The smaller local investors continue to face challenges relative to their desired returns, as their expectations are much greater than that of the institutional buyers. Value-add properties are still difficult to find, and the competition is great. We are yet to see an uptick in cap rates due to interest rate increases, but we do expect to see them by the year end. Money is still available, and despite the challenges, we anticipate another strong year of transactions and high sales volume.
Thank you, Hunt. And thanks to all of you for being with us today. We are really looking forward to another big year in 2019, and that concludes my remarks. Thank you. Thank you.